Who is winning the trade war? Are we?
So in relative terms, we are winning and we will win the trade war. And I think just look at the performance of U.S. markets relative to China and relative to others. That is consistent. The more interesting question is what happens in absolute terms. And I think what the market has priced in is the following, that the tit for tat continues, but ultimately it doesn't lead to a full-blown trade war, that we get still free but fair trade. And is there a left tail? Sure there is. I think what the market hasn't realized as yet is that there is a right tail. I call it the Reagan moment for trade, that when people realize that at the end of the day, the U.S. will prevail because it's a less open economy, because it's a more dynamic economy, that ultimately you may end up in a situation where the U.S. position in global economic terms is better off. So I see this as the market is pricing in the most likely outcome, but let's not forget there's a right tail as well as a left tail.
When we think about the Reagan moment, Mohamed, most people will think about Japanese automakers bringing production to the United States. Is that what you're talking about? More
No.
production, more manufacturing, more jobs here in the U.S. as a result of this trade dispute?
No, I'm referring to the decision that President Reagan took to have a race on military buildup with the then Soviet Union, with what he called the evil empire. Were there risks to that approach? Massive risks. But at the end of the day, because the U.S. was sure to win that war, as long as those risks were managed, you ended up with changing the landscape of Europe and changing the position of the U.S. And I think that one of the upside risks, it is a tail, but one of the upside risks is that you may end up changing the global landscape in a way that favors the U.S. because countries will realize that if we slip into a trade war, while everybody suffers, the U.S. does better in relative terms.
All right, well, Mohamed, the trade war is not your only prediction. You also brought along two others, and your predictions tend to be accurate, so one could call them tomorrow's headlines. We're going to kick it up here. You say the Fed backs away from 4 hikes for 2018. Why?
Because the rest of the world is less solid than the U.S. So if the Fed was only looking at the U.S., it would hike 4 times. However, we are going to have headwinds from the global economy. Europe is slowing down. China is not in a perfect position. And the Fed is not going to be able to ignore the rest of the world. So we're going to get a total of 3, not 4 hikes for this year.
All right, your third prediction here is the best bet in the world could be emerging markets. Really? So why?
Selective emerging markets, because they are subject to contagion. Just look what's going to happen tomorrow morning. You had news in Turkey just now about a political appointment. I'm willing to bet anything that tomorrow morning the Turkish lira is going to come under enormous pressure and other EM currencies are going to suffer. Why? Because the technicals in that market are particularly weak. So what you get is overshoots of good names, of solid names that temporarily depressed. And I think that you will have opportunity after opportunity in the coming months as global liquidity recedes to pick up good names at temporarily depressed prices.
Mohamed, always great to speak with you. Thanks so much for your time.
Thank you.
Mohamed El-Erian. All right, let's trade it. What do you think of that last prediction?
I think he's right. Emerging markets underperformed the S&P by 15% from the beginning of April through last week. And what he talked about with Turkey. Erdogan named his son-in-law as the finance minister. Not good stuff, folks. But let's go to China. Let's not get complicated, because I think a lot of people know which stocks to buy in China. And I think if I look at some of those mega cap tech names in China, I think their sell-off is one you absolutely jump on. Tencent, we had some news about some gaming and some things that they could be actually spinning off over here. Bottom line, fundamentals make sense there.
You know, the Xiaomi offering is kind of interesting. Didn't do particularly well. I'd throw that in there. This was a company that people expected to come out, IPO in Hong Kong at $100 billion last year. It was
like $53 billion valuation.
I mean, I think there's some things that you can point to and say that there's some stuff that's kind of cooling off. You know, when you think about being in the 9th year of this recovery that we're in here, you know, we have global stock markets that, other than ours, really does act well. Nobody else acts particularly well. So there's a lot of things. I just don't see us. Listen, I've said this time and time again. I think 2850 to 2550 in the downside in the S&P is the range. Have a ball. Trade the options, Pete. Trade the ranges of these things. But, you know, I just think there's a ton of headwinds.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.